Good afternoon and welcome to the Eppley Investor Briefing. My name is Nicholas Scott, the Vice Chairman of Eppley. At Eppley, we're privileged to have a loyal group of like-minded shareholders. They include retail investors, high net worth individuals, and the largest institutions in our region. Many have been with us for the entire decade we've been a public company, and we consider each of them to be our partners. I'm delighted to have this opportunity to update you all on our business. Eppley is a growing, diverse Caribbean investment company that has a long track record of producing high and consistent returns. We were founded almost 50 years ago and have been a public company for nearly 10 years. Our investment strategy is focused on private markets. We do this because we believe private markets are less efficient. We're contrarians by nature and believe that the best returns are often found where capital is the most scarce. Historically, this has led us to break new ground and to pioneer global investment strategies here in the Caribbean. Private markets also more greatly reward our strengths at Eppley, which are originating and negotiating opportunities and structuring and financing transactions. Our activities in private markets started in credit, but today extend well beyond that to mezzanine, real estate, and infrastructure. First and foremost, at Eppley, we're value investors. We use the same fundamental bottoms-up approach to evaluate all opportunities. And in every case, in every decision, we answer the same basic question. Does the potential returns outweigh the risk of loss, and is there an adequate margin of safety? This approach has paid off. In our 10 years as a public company, we've compounded our net profit at an average growth rate of 30% a year. Eppley makes money in two ways: investing on our own account and increasingly by administering and managing investment vehicles for our investors. In our proprietary portfolio, we invest relatively small sums across all our private market strategies in an opportunistic way. For example, we're one of the largest commercial lessors in Jamaica. That means we own a fleet of hundreds of cars, trucks, and equipment that we rent and lease, mainly to a diverse group of clients in the distribution, manufacturing, and industrial sectors. We also provide flexible, tailored lending solutions to some of the most prominent firms in Jamaica. They rely on Eppley to solve problems, to come up with solutions, and to deliver exceptional white glove service. We also own real estate and infrastructure assets. Eppley administers and manages capital for investors in three main investment vehicles. These investment vehicles also participate in our private market strategies, but do so at a greater scale. We've built this business completely from scratch in the last 5 years. And today we have assets under management in excess of $120 million US. For example, we co-manage the Caribbean Mezzanine Fund 2 with NCB Capital Markets. CMF2 is a successor to CMF1, the first mezzanine fund in the history of the Caribbean. CMF1 had a successful outcome, producing mid-teens returns for investors across its life. Eppley also manages the Eppley Caribbean Property Fund. ECPF is the largest fund in the Caribbean and owns landmark commercial properties in Jamaica, Barbados, and Trinidad. And finally, and most recently, we co-manage the Capital Infrastructure Group with Jamaica Producers. At Eppley, by combining the opportunistic returns in our proprietary portfolio with the scale and reliability of the income we earn in our asset management business, we've created a strong, growing regional investment company with high-quality earnings. I work together with Eppley's chairman, P.B. Scott, to provide oversight of Eppley's business, to reinforce the investment philosophy at the core of our success, and to empower our exceptional executive team. On our board, PB and I are fortunate to be joined by business people with expertise in accounting, law, risk management, and leadership in both the private and public sectors. Eppley's business is managed day to day by a tight-knit team of outstanding executives, most of whom are also shareholders. They're steeped in Eppley's culture and invested in our long-term success. This year, Justin Nam assumed the leadership of Eppley's team and our business. Justin joined us in 2015 and has served as our general manager since 2020. He's been an instrumental part of building our business. We also recently promoted Jackie Watson to Group CFO, recognizing her expanded role across Eppley and its investment vehicles now spread across the Caribbean. Finally, we named Denise Gallimore to the position of VP of Real Estate and Infrastructure and gave her the responsibility to lead the Eppley Caribbean Property Fund. As I look ahead, I have every confidence that this team and the business that we've built together will continue to grow and expand on our outstanding long-term track record.
My name is Justin Nam, and I'm a director of Eppley, where I serve as a general manager and lead a team of focused professionals responsible for delivering returns to our investors. Our experience investing across asset classes such as credit, mezzanine, real estate, and infrastructure has been instrumental in the results we have achieved to date. Our intellectual capital moves across the firm for the benefit of all our investors. While growth in asset management and permanent capital have been increasingly important to our business, our core $5.5 billion credit portfolio continues to be a significant contributor to our bottom line. Our proprietary assets now comprise various portfolios, including specialized alternative lending solutions to corporates, non-traditional products such as factoring of receivables, and commercial leases for different types of vehicles and equipment. There's broad sector distribution among our portfolio of commercial loans and leases, with capital provided to infrastructure, real estate, energy, and manufacturing and distribution companies, to name a few. While our assessments involve creating and evaluating models, our due diligence process extends beyond just looking at a spreadsheet. We're very hands-on and actively monitor our investments. We are very selective when deploying capital and employ a rigorous process with careful structuring that both meets the needs of clients and, just as importantly, generates attractive returns with significant downside protection. Our $1.7 billion lease portfolio represents the largest component of our on-balance sheet investments. Many of our customers are some of the leading blue-chip corporates and institutions in the region. These counterparties do business with us because our leases provide an efficient, low-cost alternative to loans that is not offered by traditional financial institutions. Demand continues to be robust, and our net interest income has been improving by 30% year to date. An example of the types of corporate fleets we finance is shown before you on the screen. Now, I know the sharper analysts will have recognized our growth, but when we assess the environment in which we operate, we realize that there's more we can do to tell our story to the investing public. And I'm proud to be a member of the hardworking team who has executed on the strategy that has led to net profit growing at 30% compounded on an annual basis for the 10 years since being listed. It's important to note that our careful due diligence, evaluation, and structuring has been tested and performed well over different credit cycles. We had no material credit losses over this time period, and this was put to the extreme test by COVID and can be validated through our audited financials. Our growth has not come at the expense of risk management. We have one of the most favorable dividend policies on the stock market, where the vast majority of net profit is distributed to shareholders annually. This requires us to focus not only on growing earnings, but also on maintaining our quality of earnings. The chart before you supports that we've met this objective through the payment of $895 million of dividends since our listing on the junior market and subsequent graduation to the main market of the Jamaica Stock Exchange. We are privileged to have a group of shareholders who share our investment philosophy, and I invite Dr. the Honorable R. Danny Williams, the founder of Life of Jamaica, now Sagicor Life, to share his experience investing with Eppley.
My name is Danny Williams. 9 years ago, I was approached by Nicholas Scott to make an investment in a startup company, Eppley. And I decided through my investment holding company, Ravers Limited, to do so. I must admit that this has been one of the best investments I've ever made. And this is entirely because of the way in which the company has performed over these 9 years. My dividends represent 1.5 times the original investment, and my capital gains are some 12 times. So you can well appreciate why I would be very happy with this investment. But you know, in addition to the fact that it has turned out to be such a very good investment, it has also been a pleasure dealing with Nicholas Scott and the Eppley staff. Whenever I want information, it's always available. Nobody's ever too busy to talk to me or give me the information that I need. And I've always felt that I'm dealing with people who care and people whose integrity is above reproach. I hope Nicholas will come up with some more investments like this and give me the opportunity to participate in it.
We are honored to have been given the opportunity to deliver consistent, attractive returns to our shareholders. The chart on the screen illustrates the point. A $1 million investment in our 2013 IPO has paid $2 million in dividends, that's twice the initially invested amount, and is now worth $15.4 million. We continue to quietly build a robust business focused on delivering returns, and we will continue to work hard to justify the continued support of you, our shareholders.
Hi, my name is Denise Gallimore. I am Vice President of Real Estate and Infrastructure at Eppley. And today I am pleased to introduce to you the Eppley Caribbean Property Fund Value Fund, the largest listed real estate property fund in the Caribbean. In fact, Eppley Caribbean Property Fund Value Fund is the only real estate fund that's listed on all 3 regional exchanges, being the Jamaica Stock Exchange, the Barbados Stock Exchange, and the Trinidad and Tobago Stock Exchange. Our stated investment strategy for the Value Fund is to identify opportunities to diversify and grow the portfolio to create value for our shareholders, tenants, and partners. The Eppley Caribbean Property Fund is composed of 17 buildings spanning over 875,000 square foot, all located in the largest English-speaking countries in the region. Approximately 56% of our assets are in Jamaica, 39% in Barbados, and 5% in Trinidad and Tobago, and we continue to seek opportunities to expand even further. The Value Fund portfolio is not only strategically diversified by geography, but also by asset type and use case. Of the 17 buildings and 875,000 square feet owned, approximately 38% is used for retail, 33% for industrial and warehousing purposes, 18% in office, and 11% in BPO. Eppley took over the management of the fund in May 2018, and we have been focused on the strategic mandate to diversify and scale, which has resulted in an operating performance which reflects our keen focus on fundamental analysis. As you would see on the screen, we're proud to own and manage a pool of premier assets which are iconic and instantly recognizable in their locations. For example, we own the Mall Plaza, which is located in the heart of the busy central business district of Kingston in Jamaica. On the waterfront in Barbados, we also own the Hastings Business Center, which is occupied by one of the big 4 firms, KPMG. Additionally, as we look across our portfolio, we also own key strategic assets that are, for example, located on the Port of Kingston in Jamaica. And we also have a property in Trinidad, which is located in a very busy thoroughfare of Valsane and Tregarate Road. At Eppley, we believe our strengths lie in our ability to partner with sophisticated owners and tenants to originate, structure, and execute large private market transactions across the region. Our properties are tenanted by strong blue-chip partners who provide strong, stable rental cash flows. Additionally, our tenants favor ECPF as landlords, given the transparency of our financials and operations and our investment mandate as a listed company. Our dividend policy is to distribute the vast majority of annual funds from operation. FFO, which is the measure of the fund's core operating profitability based on rental income, less its expenses and its cost of financing. We forecast that we will continue to increase dividend yields as the portfolio continues to grow. Another important metric to shareholders is capital appreciation, which not only enhances shareholder returns, but also provides an inflation hedge for their portfolios. The super gains noted here on this slide, we believe are all due to the fund manager's ability to originate, structure, and execute large private market transactions across the region. In fact, over the 3-year period from 2019 to 2022, the fund reported approximately $8.5 million in fair value gains, which are directly passed on to our investors through the appreciation in our net asset value. The fund will continue to pursue all opportunities to improve net operating income across all of our current properties, as well as through acquisitions where they align with our hurdle rates. In the case of acquisitions, we focus on the English-speaking Caribbean, targeting transactions equivalent to US 10 to 20 million and up to 50 million with co-investors. We are biased towards industrial, BPO, data centers, and food-anchored retail, which has shown significant resilience throughout the pandemic. We will consider office, retail, and hospitality on a case-by-case basis. The fund, however, does not invest in residential properties and does not directly undertake developmental risks. Our target net operating income yield for all acquisitions are between 8 to 10% on an unlevered basis. A key component of our growth and acquisition strategy for the fund is our board of directors. The board of directors is comprised of reputable regional business leaders who have guided the growth and strategy for the fund. Most importantly, our board is directly invested in the fund alongside our shareholders with an ownership stake in excess of 10% of the fund. We have 2 case studies which will help us to better understand Eppley's vision and investment approach to its portfolio. In the first case, our newest acquisition, which was brought on the portfolio in March 2022, is 22 Chalmers Avenue. It is a 99,000 square foot purpose-built business process outsourcing facility, which is state-of-the-art and COVID resilient. We co-own this building with JMMB fund managers, and the property is strategically located along the major transport hub of Kingston. The strategic investment in this property highlights the fund manager's ability to structure and to identify transactions on the private market, and we are currently proud to have partnered with ITEL to occupy this property, which currently earns an NOI yield of 8.25% on a US dollar basis. The second case study that we have is the Mall Plaza, which was built in 1972 and is one of the landmark retail commercial properties in the heart of Kingston in Jamaica. The mall has been featured in the lives of generations of Jamaican shoppers. It's close to critical transport routes and a growing residential development. Since acquisition, Eppley has updated the tenant profile of the Mall Plaza by introducing Starbucks coffee, Domino's pizza, Mailpack, amongst others. And we look forward to the continued growth of this property in line with our vision for it. We believe that these 2 case studies have highlighted for you the extra difference that Eppley Caribbean Property Fund brings to our investors. To remind you of the investment case for Eppley, we currently own 17 properties which are landmark across the Caribbean. They are diversified by country, by asset type, and by use case. We currently pay dividends quarterly without taxes withheld. And although we are listed in Jamaican dollars on the Jamaican Stock Exchange, all dividends are paid in US dollars, providing hard currency returns. Additionally, funds from operations, which is the key metric for dividend distribution, continues to grow and enhanced by the capital appreciation of our properties, which will provide an inflation hedge and enhance returns. We know that the fund is actively and professionally managed by Eppley Limited, and if you are interested in investing with us, you may contact us directly for further information.
Hi, I'm Adam Hugh, Assistant Vice President at Eppley Limited. The Caribbean Mezzanine Fund is our credit and mezzanine investment vehicle, co-managed by Eppley and NCB Capital Markets. The fund's investment portfolio is US $40 million and growing. Our investors include some of the largest institutional and high net worth investors. We are pioneers of the region's first mezzanine and alternative credit vehicle. We have deployed capital in this strategy since 2017 and have demonstrated that mezzanine investing can deliver attractive cash returns with robust downside protection for our investors. Businesses rely on CMF2 to provide tailored, specialized lending solutions when traditional financing is not readily available or suited. Mezzanine investing is an alternative form of financing that combines features of debt and equity. It fills the gap between debt and equity in a company's capital structure. Like equity, the investments can participate in profits, and like debt, it can have fixed payments, collateral, and the right to be paid before shareholders. When structured properly, mezzanine investments offer investors the upside of equity with many of the downside protections of debt. This form of hybrid capital requires technical structuring and underwriting. Despite acting as lenders, we are entrepreneurs and partners. This mindset allows us to think fundamentally and commercially about how best to serve our clients while managing default risk. We focus on private markets where capital is not readily available. This has proven to provide attractive returns. The demand for flexible capital is high. This gap cannot be easily addressed by commercial lenders due to being regulated, risk-averse, and slow. This form of flexible capital is well suited for the current environment, which creates an opportunity for our fund. Although mezzanine has a lower return than private equity, we are not reliant on an IPO or sale, which is challenging in small markets. Instead, our capital is often returned through amortization or can be refinanced by traditional lenders. In every investment decision, we assess if the potential returns are greater than the risk with adequate downside protection. Our partner NCB Capital Markets is a brokerage and investment banking arm of the NCB Financial Group with a strong regional footprint. Together, we have a successful track record of providing mid-teens returns and distributing consistent US dollar dividends to our investors since 2017. This is the vehicle we use to invest in mezzanine. We are invested alongside our shareholders with significant skin in the game. The fund is led by an experienced team with a regional network and a robust pipeline of opportunities. Strong governance is a critical element across all our investment vehicles. Investments undertaken by the fund are overseen by a committee with extensive experience in deploying capital and risk management. Our committee includes our chairman, P.B. Scott, and the Group Chief Risk Officer of NCB Financial Group, Alison Winter. The fund has a US $40 million high-quality portfolio of mezzanine assets generating returns of 14% in US dollars. For 2022, the fund distributed 100% of its profits to its shareholders. The fund is diversified, requires technical structuring, and includes credit facilities with flexible payment profiles such as interest only, payment in kind, distressed debt restructuring, non-traditional equipment leases, convertible debt, factoring of receivables, margin facilities, and ordinary equity. Our portfolio company, North Star, is the exclusive provider of water to the University of the West Indies Mona campus. The company provides a minimum of 500,000 gallons per day under a 20-year take-or-pay concession. North Star facilitated investment from a US-based private equity fund. The company does not own the property and equipment is untraditional for lenders. The investor needed flexible capital to complete the project, and CMF2 invested across the capital structure with an equity stake and mezzanine loan. We are proud of this investment. It provides stable, predictable cash flows and significant water savings to UWI, which allows them to direct savings for educational purposes. Also in the portfolio is Pelican Power, a 7-megawatt cogeneration plant which has been providing the campus with all its power since 2019 through a 15-year lease agreement. The plant provides an efficient source of energy to UWI. It is powered by LNG, and the exhaust from the engines are used to power cooling for the buildings. The university has also used the project as a means of knowledge transfer to its engineering students by employing their services through their subsidiary Mona Tech. Since 2017, our mezzanine vehicles have grown net profit at a compounding annual rate of 24% and distributed a total of $6.1 million in dividends since inception. As mentioned previously, we manage risk carefully, and that includes having a strong balance sheet. CMF2 is well positioned with no debt on its balance sheet, which is an opportunity to improve overall returns. CMF2 provides investors with exposure to a US $40 million diversified portfolio of mezzanine investments with attractive returns. The fund has best-in-class management with strong origination network, track record, and skin in the game. CMF2 have a private placement targeted for early 2023. If you are interested in investing in CMF2, co-investing in our deals, require flexible capital for your business, please reach out to us at Eppley Limited.
Hi, I'm Samantha Somerville, Portfolio Analyst at Eppley Limited. Capital Infrastructure Group, or what we refer to as CIG, was formed by Eppley and Jamaica Producers Group Limited to invest in infrastructure projects across the Caribbean. JP is a Jamaican-owned multinational and has a significant global logistics and infrastructure footprint through its holdings in companies such as Kingston Wharves Limited. JP and Eppley control and manage CIG as equal partners, and as managers we are aligned with our investors. The joint venture's first raise was funded by $20 million of capital commitments from both managers, Eppley and JP, as well as external institutional investors. Eppley and JP each have successful track records in infrastructure, owning and operating significant infrastructure assets including ports, energy, and water projects in the region. CIG will allow both companies to increase the scale and scope of their future infrastructure investments. Through Eppley and JP's regional network, the managers bring a robust pipeline of infrastructure opportunities including energy, transportation, communication, and critical water infrastructure assets for Jamaica, such as the Rio Cobre water treatment plant. CIG's board of directors bring a wealth of experience and expertise to the company. CIG's directors include its chairman Jeffrey Hall, the managing director of Jamaica Producers Group Limited, Alan Buckland, the Group Finance Director of Jamaica Producers Group Limited, Nicholas Scott, Vice Chairman of Eppley and Chief Investment Officer of the Mezzanine Group of Companies, Richard Pandui, CEO and Managing Director of Seprat Limited, Stephen Gooden, CEO of NCB Capital Markets, and Tracy Ann Spence, COO of NCB Capital Markets. One of CIG's first investment opportunities is Rio Cobre Water Limited. CIG has partnered with Vinci Construction Grand Projects, a subsidiary of Vinci, to form Rio Cobre Water Limited. Vinci is one of the largest construction groups in the world, operating over 120 countries. Vinci has implemented projects that have resulted in improved access to water resources globally and across Jamaica. CIG will be the majority shareholder of Rio Cobre Water Limited, and Vinci will be serving as the engineering, procurement and construction contractor, operations and maintenance provider, and an equity investor in Rio Cobre Water Limited. Rio Cobre Water Limited has entered into a public-private partnership agreement with National Water Commission to design, build, finance, and operate a 50 million gallon per day water treatment plant in St. Catherine under a 25-year concession. The project cost is estimated at approximately $77 million, and the plant will be the second largest water treatment plant in Jamaica, serving about 8% of Jamaica's water supply. The plant will assist National Water Commission to address a 50 million gallon per day deficit in potable water in the areas of Kingston, St. Andrew, Portmore, and Spanish Town. The project is structured to deliver an attractive return to the equity investors, while also positively impacting approximately 150,000 Jamaicans, as it will reduce and eliminate the need for future trucking of water and water restrictions to the affected areas during periods of drought. In November 2022, CIG and Vinci achieved a significant milestone by signing the water purchase agreement with National Water Commission. Construction of the water treatment plant is expected to commence in 2023. As evidenced by the Rio Cobre Water project, private sector investment in infrastructure can greatly benefit communities across not only Jamaica, but the Caribbean, while offering regional investors a stable, attractive source of income. We look forward to exploring new infrastructure investment opportunities together with our partner, Jamaica Producers Group Limited. If you're interested in investing with us, partnering with us, or require a strategic capital infrastructure investor, please feel free to reach out to us at Eppley Limited.
Good evening, ladies and gentlemen. We're honored and grateful that you have taken the time to participate in Eppley's investor briefing. It's always a pleasure interacting with our shareholders and giving a sense of what we've been up to over the last few months. I would like to now just hand over to our question and answer section, which is going to be about 20 minutes long. We hope that you found the presentation, insightful, and really just looking forward to hearing some of the questions that you have today and sharing in this evening with you on those matters.
So the first question is, how are you navigating the rising interest rate environment at Eppley and the funds it manages?
All right. Well, we have demonstrated consistent growth across different cycles. And I think we're well positioned with the fact that our assets are typically shorter than our liabilities. So this gives us an opportunity to reprice. And this may actually and should actually continue to benefit Eppley and its leasing business as our net interest margin should increase going forward.
I would just also add to that our team has successfully built an asset management franchise over the last 5 years that produces high quality earnings that are completely immune to any changes in interest rates. In fact, our business is a function of two drivers of earnings. One, the spread on our funds and how we invest them, which is impacted, and as Justin said, is favorably impacted given our asset liability mix. But the other stream, which is almost equal in size, is completely immune to that, and that is our AUM of permanent capital, which provides quarter after quarter steady and reliable cash flow in the form of management and performance fees.
And for CMF2, we currently have no debt on its balance sheet, and it's well suited in the current environment to take advantage of that. Across the region, we're seeing many opportunities with attractive returns with reasonable loan to values for investors.
Thanks. Have you been able to maintain the spread on Eppley's loan, leases, and receivables portfolio, especially with the rising interest rates and which impact the cost of funding?
We have, and actually we're originating new loans and leases at higher rates than before. In line with the current environment, we have prepared for this and funded ourselves for an environment like this. We thrive in environments like this, and we get to be more selective. We have a lot of dry powder, cash on our balance sheet, precisely for us to be able to deploy into more attractive opportunities in an environment like this.
Yeah, I would also just want to emphasize that all of our liabilities, which are mainly in the form of preference shares, we have very little debt. We have very healthy equity. And most of the funds that we deploy on our prop book, outside of our $120 million US of assets under management, comes from preference shares. They're all fixed, and they were all raised at a time with much more favorable rates. And so today, we're able to deploy capital at attractive returns, but our funding costs, unlike banks or security dealers, has been fixed. In fact, our team, and Justin in particular, led a fundraising, I believe it was in the summer of 2021, which locked in for many years funding for us at very attractive rates, which we're still benefiting from and expect to for some time.
Eppley has been relatively quiet, with a YouTube page just popping up for this briefing. How much money does Eppley plan to raise for itself or its funds?
We're not currently in the market to raise funds at this point in time. We're assessing different opportunities that may emerge, and we have been strategically assessing how we engage with our investors. We want investors to kind of have a better sense of what we do. Over the last decade, we have been dedicating our resources to delivering results. I think we have done that. We now have a track record that we're very, very proud of. And so this forum is, I think the first of many to kind of give investors a sense of what we've been up to and to expose investors to the exciting things that we've been doing across the real estate portfolio through the Eppley Caribbean Property Fund, the Mezzanine Fund, as well as our infrastructure fund, which is coming on stream.
Yeah, I'll add on our CMF fund. We're in the process of determining the appropriate time with our partner NCB Capital Markets for a raise sometime this year.
I would just also want to add that at Eppley, we have a culture, a strong culture that is about doing and not telling. And that served us well for over a decade. That will not change, but I think what you will see more of from Eppley is a more concerted effort through forums like this of a very high quality to ensure that all of our investors and prospective investors are well informed about the opportunities that we have. We'll do that not because we want to raise money. We have had no problem doing that. We have enjoyed and are privileged to have access to capital, not just in Jamaica, but across the region. But we'll do that because that is the right thing to do, and that's embedded in our culture. And you should look forward to more engagements like this, always with what those people who know Eppley should come to expect, which is a very high quality focus and differentiated approach.
What is Eppley's average lease tenure, and what is the main sector for these leases?
I can take that. So average lease tenure, our leases tend to range between 3 to 5 years. It's really a wide distribution of sectors that benefit from the leases that we have, because the types of equipment that we and motor vehicles that we have are used across different industries, ranging from manufacturing, retail, distribution, and we're seeing continued growth and demand for these products, especially in an environment like now.
How exactly do prospective investors invest in these projects? Do we buy shares of Eppley?
Denise, you want to handle that one?
So currently, Eppley Limited as well as Eppley Caribbean Property Fund are listed on the Jamaican Stock Exchange. More specifically for Eppley Caribbean Property Fund, we are one of the largest listed real estate funds in the region, and we're cross-listed across Jamaica, Barbados, and Trinidad. So there is an opportunity to invest through the stock exchange and to be able to have the type of returns and features that we're talking about here. So definitely speak to your broker about it and do your research, and we can facilitate that.
Eppley has a number of different investment platforms. So our shares trade on the Jamaica Stock Exchange. We were listed in 2013, and we would encourage any interested investors to look at those shares. We're not in the market raising capital, but the shares trade. And then we have a number of investment vehicles, as we've mentioned. Denise runs our property business. That is a listed vehicle that's listed in Jamaica on the value fund side. It's also listed in Trinidad and Barbados. And we have a development fund that's also listed in Trinidad and Barbados. And once again, we're not currently in the market raising ordinary shares there, but investors can, at any time in any of those markets, buy and sell shares, and we encourage you to take a look at that. And then finally, we have private investment vehicles in the form of CMF and CIG. Once again, we're not currently in the market doing that. As Adam mentioned, we're assessing those. But when we do, those will all be registered, regulated fundraisers led by brokers, and we would encourage you, as Denise said, to contact them when that arises. But the purpose of this presentation is not to announce a fundraising. It's to talk about the company for the benefit of our existing and prospective investors.
Your subsidiary is purchasing a majority stake in the Eppley Caribbean Property Fund Limited Development Fund. Does Eppley plan to cross-list these shares in Jamaica?
I think that's a good question. The Jamaica Stock Exchange is certainly the most liquid market in the region. We don't have plans to do a cross-listing at this time.
What will happen with the development fund after the tender? Will management change?
There's no plans for any changes in the mandate as at now, and we're giving opportunity to investors to be able to access liquidity for shares that are very thinly traded at a premium, a significant premium to market. And that really is the purpose of it. It's us investing and showing that we have confidence in the NAV that's published and giving opportunity for investors to obtain liquidity in shares that are thinly traded on the Barbados Stock Exchange.
Will Eppley continue to focus on the asset management business as the key driver of earnings for the business in this current economic environment?
Yeah, I think it's a two-pronged approach. So the asset management business is critical. We've grown it from scratch, since about 2016, 2017. First through the Caribbean Mezzanine Fund, which we co-manage with NCB Capital Markets, then through the real estate fund, and more recently with the infrastructure fund. So that provides stable, predictable, recurring cash flow for us, and it's been very good to help us to grow our business. We think it's an opportunity to scale, but it's also combined with our proprietary portfolio, which has really positioned us well to have two prongs of the business that are performing and performing well at the same time, with cash flows derived from real assets such as, equipment, motor vehicles, real estate, critical infrastructure as well that investors can see. And they benefit from the returns through the cash flows distributed in the forms of dividends primarily, as well as other distributions from time to time.
I would want to also agree with everything Justin just said, but I want to step back and just say that at Eppley, we have a clear belief in what we do, and investors should know what that is. And that is that we've built a business to address inefficiencies in Caribbean financial markets. That's our North Star, that is that's our mandate, and that's what we do every day. That had led us initially into credit on our own account, but more recently that's led us into the areas that Justin has described. So whether we're investing our own resources, whether we're doing that on behalf of people whose funds we administer and we manage, or whether we do entirely different things that don't exist in our business today, what you can as an investor expect is that Justin, Denise, Adam, myself, and the team and our board, led by our chairman, P.B. Scott, will be thinking about how to address inefficiencies in our markets, because we believe doing that delivers sustainable returns adjusted for risk. Our track record demonstrates and validates that that's true, and that's what you can expect from us in the future, notwithstanding exactly what way we do that.
Does the possibility exist to list some CIG vehicles or use a JSE as a route of financing?
Yeah, I think the possibility exists. It's not in the pipeline now for that to take place.
Yeah, we believe that the JSE is a powerful tool. We've used it. We're proud to be an institution based in Jamaica, even though we're regional in focus. Jamaica has the deepest capital markets in the region, and we've used them. But that's not the only mechanism to deliver liquidity to shareholders, and there are many instances where some of the institutional investors that we work with have a preference for the shares not to be listed. So we will continue to evaluate that on a case-by-case basis.
Is Eppley planning to have quarterly briefings?
We're looking at how best to engage with investors. I think this forum gives an example of how we've adjusted our approach to engaging, and we're looking at this. It's not our plan at the moment to have a quarterly forum like this. This will probably be more of an annual event, but we'll continue to update our investors through our quarterly published financials as well as our audited financials, which will be published in line with regulations as well.
Are there any pipeline opportunities for the Value Fund?
At the Value Fund, we are always, as is our mandate, to find opportunities for income-earning real estate within the English-speaking Caribbean. As it stands at this point in time, we continue to evaluate opportunities across the region. We know that there is increased interest in Guyana, for example, as one of the fastest-growing countries in the region. We don't currently have any investments there. However, the opportunity exists for us, and we continue to look at that. And opportunities, again, are assessed based on fundamentals on a bottoms-up approach, and they must fit within our requirements for our hurdle rate. So when there is more information that is available to share, we will share that, but we continue to look throughout for opportunities.
How much cash does CMF2 have to deploy, and how much leverage does CMF2 have?
So as mentioned in the presentation, we manage risk carefully. CMF2 has a strong balance sheet, and we see this as an opportunity, and we continue to assess how we can, if we need to take on leverage, which is appropriate for CMF2, this will, it would improve the overall returns for the fund. But in terms of our current cash balances, the fund is private, so I'm not able to disclose. But what I can say is that between NCB Capital Markets and Eppley, our pipeline is well in excess of the cash we have.
Why would Eppley fund managers take a majority stake in the development fund trading at a discount?
I can take that one. I think it's really a good question, and it's demonstrative of who Eppley is. It's not common for managers of mutual funds to purchase such large blocks of shares in their mutual funds. Most people who do that in Jamaica and globally are happy to have very little capital at risk, very little alignment with their mutual fund shareholders, and happily collect their fee. That you'll never find that to be the case with Eppley. Eppley is primarily a principal investor that views everything as their own, has our own significant resources, and as this transaction demonstrates, is willing to be decisive and use those resources to create shareholder value. That's unorthodox, that's contrarian, but Eppley is unorthodox and contrarian. So the reason we're doing it is it's good for shareholders in that vehicle who would like some liquidity, because the shares are thinly traded in Barbados. So for those who, for time preferences, for alternative uses of their capital, would like to exit, we're providing that liquidity to them. But we're also creating a lot of value for any shareholder which remains. And we're demonstrating with our own capital that we will eat our own cooking. And we will do so even at a significant premium to the market price, because the underlying assets are, as we have consistently disclosed in all of our disclosures, of a very high quality with a very bright future, and we're putting our money where our mouth is.
I would like to add to that, since Nicholas spoke about alignment, I would like to just touch on CMF2 and also acknowledge our partner NCB Capital Markets. They've been with us and partnered with us since 2017 in this strategy when, we were a lot smaller company at that time. And the mezzanine fund, this is a vehicle that we use to invest in mezzanine. The managers own over 20% of this fund, and we rely on it for the dividends. And the shareholders within this vehicle are invested alongside us.
Absolutely, Adam, and I think we could broaden that and say that one thing which distinguishes Eppley from other managers is our willingness to deploy our own capital in our strategies. And that is what is happening as per this question in the development fund. But it already exists in all of our other vehicles. As Adam mentioned, we and our co-manager are significant investors in CMF. Ourselves and our co-managers, Jamaica Producers, are significant investors in CIG, where we're not only earning fees by investing on behalf of others, but we're putting our capital at risk. And even at ECPF in the Value Fund, the largest shareholder of the Value Fund, which started at zero and is now the largest shareholder, is an affiliate of ours. And our directors and our executives are, in almost all instances, shareholders as well. So we have a long tradition, culture, and mindset of being aligned with our investors, and this transaction is just a continuation of that.
What other types of projects does Capital Infrastructure Group expect to commence in the next 12 to 24 months?
Well, it is a private fund, so I think it would not be appropriate for me to speak about specific investments other than those that are already in the public domain, like the Rio Cobre project. But I think you can expect that throughout the English-speaking Caribbean, and in Jamaica in particular, CIG will be playing a role in financing investments in areas like water, renewable energy, and other forms of infrastructure. And that's a fairly broad asset class, which encompasses, as I said, water, energy, transportation infrastructure, and even digital infrastructure as well. So we don't have any announcements to make at this time, but you should expect to see more of what has been in the public domain, more projects that are akin to the Rio Cobre project.
Please update us about your share buyback scheme.
So at there is an approved share buyback program where we look for opportunities to acquire the shares below the net asset value of the Eppley Caribbean Property Fund in particular, which is within my portfolio. I'll speak to that. This creates an opportunity, of course, for us, as would have been mentioned before, where we see that the net asset value is, we believe in the properties that we have, we believe in the core value that they have, and if they're trading below the asset value, then there is an opportunity for us to jump in and to reap the benefits of that. So that's really the mandate behind our share value.
Yeah, and I would add that the share values would be underpinned by independent valuations which are conducted twice per year. And in addition to that, the financials are audited. So these valuations, we think, are fair and independently certified by third parties.
Sam, I would really be remiss if I didn't take the opportunity of this question just to point out to this audience, as we have consistently in all of our recent shareholder letters, that we believe the shares of the Eppley Caribbean Property Fund, and I'm talking now about the value fund that's listed on the Jamaica Stock Exchange, that those share prices are at a significant discount to NAV. And we would encourage investors to take another look at that. Our assets in this fund are all, as Justin said, appraised independently on a periodic basis. We have very little debt. And the discount persists. We, as you mentioned, continue to buy back the shares through the share buyback, but we think it's a very compelling investment opportunity. We're not raising capital at this time, but on the secondary market, we think it's certainly worth a look given where they're trading, given the underlying cash flows.
We have time for one last question. How will the Rio Cobre project aid in the development of Jamaica?
I'll take that one, Sam. Eppley, as I mentioned, has a philosophy that to serve our investors, we can address inefficiencies in Caribbean financial markets. And we do that because we think that's how we deliver returns to shareholders with limited risk. But we also believe that these strategies have a developmental impact in that they provide risk capital to projects that are badly needed, that are underserved by, in many instances, the traditional financial system. Infrastructure investing is a great example of that. The Rio Cobre transaction is one where ourselves, through CIG, with our great and outstanding partners at Jamaica Producers, and our partners at Vinci, French multinational that's one of the largest infrastructure players in the world, have partnered together to construct what will be the second largest water treatment facility in Jamaica. It will deliver about 8% of the water supply in Jamaica, about 20% of the water supply to the Kingston and St. Andrew metropolitan area. And if we're able to do this and complete this, we will have contributed to Jamaica in constructing that facility, a facility that will provide additional water, the most critical resource, to the NWC, and have it serve its customers as the country continues to grow, most directly in the St. Catherine area. We will have done that at no fiscal cost to the government of Jamaica, purely as private institutions in partnership with multinationals. And it will be a demonstration of Eppley's capabilities, but it will also be a demonstration, frankly, of many other stakeholders. The government of Jamaica, the Development Bank of Jamaica that has been critical into this process, the NWC, the OUR, Vinci, and the entire ecosystem of public and private partners. So we are very excited to be part of that project. We're extremely privileged to have been given the opportunity to be one of the shareholders in the company that will be undertaking that very important national project. Sam, are there any other questions at this time?
No other questions. Thank you.
I would want to encourage any shareholder that has not had any investor or any other interested party who has not had their questions answered to please email them to us. Eppley, notwithstanding that this is a different format for us, has a long-standing belief in how important it is to engage with our stakeholders. So please let us know, and we'll respond to that email promptly. But at this time, I would just like to extend thanks to our team, my fellow people on the panel here, Justin, Denise, and Adam, the entire Eppley team, for organizing this. I'd like to thank our partners at Market Me for helping us, and I'd also like to thank all of you for taking the time to log on and to listen. Please send us additional questions. We look forward to your feedback, and you can expect more engagements from us like this in the very near future. Thank you very much.